Top reasons professional athletes file for bankruptcy by Sarah Bawano. Professional athletes lose their money at an alarming rate. 60% of National Basketball Association NBA players file for bankruptcy, and 78% of National Football League NFL file for bankruptcy within 5 years of retirement. Major League Baseball players also file for bankruptcy, however, their numbers are not as high as in other sports. Studies found the number one reason professional athletes file for bankruptcy is partly due to the lack of knowledge of gross versus net value. Initially, rookie players entering the league are exposed to the gross value of their contract and do not incorporate all the taxes and deductions. Aside from the usual income tax applied to every NBA player's salary, there is an additional jock tax. Jock tax is a fee that taxes professional athletes for the games they play in a particular jurisdiction. As of today, 20 of the 24 states that have a franchise in at least one of their 4 major leagues imposes this tax. Another fee applied to NBA players in particular are escrow fees. The escrow system is an attempt to guarantee that players' salaries and benefits do not surpass the guaranteed share of basketball-related income. This originated from the systemic issue where players' contracts are negotiated and agreed upon before the actual BRI figure is certain, and thus the player's guaranteed share is known. Another fee that, although it's small, it adds up is the agent fee. Agents are limited by the collective bargaining agreement to charge 5 to 7% depending on the league. Agents often make 5 to 10% of their client's contract through management fees. Agents also make 10 to 20% of the athlete's endorsement contract. These figures vary dependent on the sport. The next issue professional athletes face is developing a false sense of value. Money tends to flow easily for them. Research shows a major problem professional athletes face is living above their means. In both the NBA and the NFL, players tend to affiliate material items with fame or status. The top material purchases made by athletes are towards property, vehicles, jewelry, clothing, accessories, and other lavish things. Part of this desire is to keep up with the veterans. They see the veterans' lifestyle and quickly desire to imitate. Surprisingly, another issue for professional athletes is divorce. Studies indicate that 60 to 80% of pro athletes divorce at some point in their lifetime. Lastly, the final bankruptcy issue professional athletes face is receiving a black card. The black card requires a certain amount of income and also requires a certain amount of spending. In order to qualify for an American Express black card, the requirements are to charge at least $250,000 annually. There is no way to apply for this card. Rather, players receive an invitation to apply. It is not necessarily a credit card, it is more so a charge card, so the balance must be paid in full each month. Attaining this card adds a level of exclusivity to players. With having this much freedom, it's easy to get caught in debt because you could essentially purchase anything. The ultimate reason majority of these players file for bankruptcy is because of lack of knowledge in finance. Most financial advisors and accountants may advise their players to not spend as much. However, the player is free to purchase whatever they want. In my opinion, the best way to solve this issue is to do a prep and lay out the budget for these players so they understand what comes in and what goes out.